Welcome back to the floor this evening here, Friday Unemployment, March 4th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms with their overnight cash management. All eyes stay on oil, folks. You know, we had an unemployment number, and yesterday we had a strong rally, big equity rally in anticipation of a strong unemployment number. That number actually came out plus 192,000, and the unemployment rate actually dropped 8.9%. I know that's kind of an ambiguous barometer, but people are looking at that and actually a little disappointed this morning. We're actually trading the S&P prior to the number around 1332. We've come off here and actually touched that 1318 level, which I've talked to many times. You know, yesterday Trichet spoke at the ECB. He was quite hawkish, and he actually, the exact words are the strong vigilance over rising inflation. When he historically has said that in the past, he obviously comes in and hikes the rate. So we're about a month away from that, so we saw a huge grab of the euro currency future. We actually just traded above the 140 mark in the euro currency. So we'll see how that whole European situation works out. You know, thanks again for all the comments back and forth about oil prices, and clearly we are at the threshold here, $104. That is damaging the environment, and we'll see if that translates, how quick is it going to get to the pump and how hit is going to consumers. So we'll see how this all translates today. But right now we're at a big area here in the Treasury. You know, we saw on that Treasury number, you know, it was a 118.05 low off that number. Went up to that 50-day moving average of 118.22, rocked back beneath it and backed and filled like I tweeted this morning. You can actually get me on my Twitter at @thekiller, or actually comment on this video what your thoughts are on this bond market, because it still seems a little bit of a red flag here pointing to the SPOO, despite the fact the SPOO has kind of recovered all of the losses from 2 weeks ago. You know, I think that 119.07 right now in the 30-year, that's acting as a pretty good cap. We'll see if they come and grab, but bonds are almost up a point, folks, so pretty interesting day developing already. The S&P, you know, that big rally, it was kind of, it felt like that December-January rally where there was no downtick yesterday. They just took it up, and took it up, and they just had the shorts pinned yesterday. You know, and that 1331, that's been kind of the killer ceiling I've been talking about. That's been a pretty good level. You know, today we tested that 3450 come off, and we actually went down to that 27 level about 3 times, and each time we went down there we bounced up, but we could not get back into the 30s. That 4th time we rocked down and went down to that 1318 level. It's been a great level for us, so we'll see if there's some support there. If it gets underneath there, the bulls are in trouble, and they're going to come in and sell it even harder than they have this morning. But oil, no doubt about it, they're looking at oil, and if oil continues to rise above that level, they're going to hit this. But watch how the oil trade develops. All eyes are on oil, folks. The euro currency, you know, it was just a wicked move up yesterday. You know, I think there is a retracement in the event that the ECB does not raise rates in the next 3 to 4 weeks. But besides that, it's hard to fade that strength up there, but at some point it has to come up for air. So folks, good luck from the Florida CME Group on this Unemployment Friday. I'm the Killer. Remember one thing, be the hammer, not the nail.